Hello, I'm Jeff Bookbinder, Vice President and Market Strategist at LPL Financial Research. I would like to take this opportunity to explain what MLPs are for those who may not be familiar, including the structure, benefits, performance characteristics and drivers, and risks. So what is an MLP? In the 1980s, the IRS enacted tax code where companies could be structured as an MLP if they had a significant portion of revenues tied to natural resource activities. However, this tax benefit came with a big condition, and that was they must distribute most of their profits to stakeholders, called unit holders, for MLPs. There are several important implications here. First, MLPs' tax-favored status boosts the distributions these entities can pay. By not paying corporate taxes like traditional corporations, MLPs have the ability to pay higher distributions than they would otherwise were they structured as traditional corporations. Second, given MLPs are required to pay most of their profits as distributions, those distributions are high. In fact, over the past 10 years, as of May 16, 2013, these securities on average have yielded 7% based on the Illyrian MLP index. For comparison, during this time, the S&P 500 utilities sector has yielded 3.9% on average. Third, paying out most of their profits as distributions limits the capital that's available for MLPs to use to reinvest in their business, which constrains growth. Accordingly, MLPs typically do not grow very fast. This means distributions tend to make up a sizable portion of their returns. If more funding is required, say for an expansion or acquisition, MLPs must raise those funds in the capital markets, which introduces credit risk. Another reason MLPs don't grow very fast is most of them are pipelines, like a toll road. The amount of oil and gas going through pipelines tends not to grow much, if at all, although the U.S. energy renaissance does bring prospects for more investment in energy infrastructure as new oil and gas shale discoveries are produced and exported. With that background on MLP structure, let's now turn to investment performance characteristics and specifically volatility. In recent years, volatility of the Illyrian MLP index, based on beta relative to the broad equity market, has generally fallen somewhere between high-yield bonds and utility stocks. Beta is a measure of investment's sensitivity to movements in the particular benchmark, in this case, the S&P. In terms of risks, there are several worth noting, such as liquidity, regulatory, environmental, MLPs' reliance on the capital markets to finance growth, and sensitivity to energy prices as well as interest rates. And although we see this risk as low, there is a possibility that MLPs lose their tax-favored status at some point as part of comprehensive tax reform. And though not a risk per se, but rather more of a consideration, MLPs, individual MLPs, typically require additional tax filings that some of you may wish to avoid. Please consult a tax advisor to discuss your personal situation. So what do we think of MLPs? To provide context for our view, let's look at the primary drivers of MLP performance. The first is yield. In the current low interest rate environment, a 5.6% yield based on the Illyrian MLP index as of May 16, 2013, is attractive. We expect yields to remain relatively low due to lackluster economic growth and continued stimulus from the Fed. Second is valuation. Based on the yield advantage versus treasuries, 374 basis points based on the Illyrian MLP benchmark and the 10-year treasury, again as of May 16, 2013, we see relative valuations as attractive. Third is energy infrastructure demand. We see the build-out of energy infrastructure continuing as pipelines gain steam, as development of unconventional oil and gas findings in the U.S. continues. And fourth, MLP performance is partly driven by the performance of income alternatives. Our stock market view is cautious near term, as is our view of other equity, income, and high-quality fixed income alternatives, increasing the potential relative attractiveness of MLPs. Bottom line, our view of MLPs based on these primary performance drivers is positive. Thank you for listening.